Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, February 12th, 2025. Ron Quaranta here with David Brillen, Joshua Ashley, Clayman. Good to see you both. Thank you, everyone, for joining us. Before we begin, our usual disclaimers. Obviously, keep in mind that everything that David and Josh and I are discussing are really our own personal opinions, don't necessarily represent the opinions of our firms, and nothing is investment or legal advice at all. If you're dialing in or watching us on LinkedIn Live, on X, on YouTube, please push in your comments and questions for David or Joshua, and we will address them as quickly as we can. David, Josh, it's good to see you both. And once again, a very eventful week. And for the audience, David and Josh are now sick and tired of me texting about economic data all week long.
Never sick of it. Never sick of it, man.
David, let's kick it off. You and I have been chatting a lot about this. The markets are really, really interesting. We've got a Fed decision next week. I keep hearing alt season's coming. It's going to be here any minute. David, what were your thoughts on some of the data that you and I saw? And I'm happy to dive into some of the details of it as well.
Yeah, I'm very interested in hearing your view. But, you know, I thought PPI was soft. I thought CPI was in line. And I mean, I'm not surprised by the job numbers. You know, they're probably, if we average out from last year, you know, there was about a 900,000 job revision. Yep. So maybe, you know, in the spirit of that, we should just add 75,000 to every month right now. You know, we'll just straight line it for now until we have more data and just add 75,000 to it. I think the net is that we will see a rate cut next week. But, you know, the one thing is I think this idea of inflation going back to 2% is going to be in the rearview mirror for a while.
Mm-hmm. David, I'm going to just say it, and we were talking about it in the virtual green room. And for everyone in the audience who's watching, thank you so much. We've talked about the data feeling and looking a little off every single month, David, I think going back 3 years. So while it was shocking to see the country made 900,000 less jobs over the past year than everyone thought, it's not wholly surprising to me. What bothers me is the economic decisions, crypto, TradFi, et cetera, hiring decisions, all of that are made based on some of this data, which I think is a little bit of a problem, you know, and I think the lack of clarity, and we could have really complicated, why are people getting fired at Bureau of Labor Statistics, and all of the conversations we've all had. Businesses make decisions based on this data. And when you see those changes, it makes you look back and think, did I just screw up? Did I really mess up my forecasts for my business for the coming year? You know, and David, on the PPI, so producer price inflation and consumer price inflation, for those who may be watching, you know, it's an important indicator potentially of where the economy is going. I don't envy David and Josh the Fed's job. Like next week, it's probably like a no holds barred cage match at the FOMC about whether or not to cut interest rates, because look at it, it's inflation seems sticky. I guess coffee is more expensive and it's going up almost 3% annualized month over month. But now the jobs data looks like not only are people not hiring, but jobs have kind of evaporated. It's not an easy discussion, David. And I wonder, I agree with you. I think there'll be an interest rate cut. I'd love the audience's opinion on this. I think 50 basis points looks a little panicky, and I'm worried about how the world reacts if we see something like that. I mean, Josh, you hear from us a lot about this. Would love your thoughts. And David, tell me you disagree.
Wenda, go ahead, Josh.
So my question sort of relates back to the jobs numbers themselves about the overestimate, right? The revised estimate. I remember last year, David, you saying a lot about how, you know, we see these numbers, but they're largely government jobs or part-time jobs or things like that. So what I'm wondering is, for the revisions, given that, at least my recollection is that we thought that it was overblown at the time, whether this adjustment is just is more rational than we might think just based on the numbers.
Look, first of all, I think people who were watching and listening to our podcast wouldn't be surprised that the jobs market was slower last year, and we talked about it a lot. And I think, look, I think that not only were the job numbers off, I think the quality of the jobs were off, like you're saying, Josh. And we saw a lot of this sort of government hiring, and now we've seen the reverse of that. So I do think the quality was less. And look, I think maybe we're starting to see a little bit of the AI trickle in here with all the efficiencies that we may see in it, and maybe there's a little less white collar hiring because of that on like the more junior end. So I think these are trends we're going to follow, but I do think that the Fed will cut 25. I don't think they will cut 50. But they probably should have been doing this 3 or 4 months ago at the very least, or maybe in March.
Yeah. And Josh, you bring up a really good point, Josh, and I don't have it in front of me. When we talk about, David and I mentioned 900, I think it was 911,000 jobs revision, one of the biggest revisions on record, I think, certainly biggest in the past several years. It has several components, right? It's the state level job, it's the government jobs, it's hospitality, it's services, it's healthcare. So it's really important to get granular to understand some of those impacts. I agree with you, David. I think it's 25 basis points. And again, I don't envy, it's not just Chair Powell. I just don't envy the board of governors of the Fed, because now everything they were looking at to make those decisions are wrong. And David, let's just say it, the Fed's behind again. The Fed's late again, the same way they were late with transitory inflation. This is not about blame, but it now becomes how does the market adapt to this? And that market is TradFi. That market is crypto companies. That market is companies that have Bitcoin sitting in treasuries.
Well, I just see the irony and the ability that we have to crunch, so much more data now than we could in the past.
Yeah.
AI is streamlining things left and right, and really, the output is amazing and some of the things you can do with it. But yet we can't get this right. We can't even get this close to right. Yeah. So there's a real anomaly there. But I think we see 25. Look, it feels like the market wants to go up from here, both the crypto market and the stock market. So look, I think that's bullish for our ecosystem. And I think the more investments we see in the space, the more fruit we'll see from it. And there's a whole bunch of things we can talk about today too, which we'll hit on, but tokenization and there's so many things going on right now. So I think, look, this is net positive in the sense that it's good for our markets. I think it's net negative that we, at this point, in 2025, we still can't get this right.
Yeah. David, Josh, David, I'm going to rip up the script on you, like out of the gate. We're not even 10 minutes in. We brought up the market, and I'm with you. And we're looking, I've talked about Bitcoin and ETH and some others and kind of this trading range over the past couple of weeks or so. What's holding Bitcoin back? Is it lack of market structure legislation, or is it we can't trust economic data?
Well, we're at 116 or 115, so it's not really being held back. I think there is a somewhat silent rotation a little bit. Like Solana's been really performing well, and I think you're on the verge of seeing a bunch of new ETFs. I think there was a Ripple ETF that came out today, I believe, and I think there's several other altcoin ETFs we should see by the end of the month or soon thereafter. So I think people may be getting into some of those tokens before the ETFs go live. Yeah. So I think that you have in play. And then I think you also have the digital asset, the DATs, are there. And there's a lot of Ethereum being bought. So I think whereas you're not seeing more, Bitcoin DATs, so to speak, you're starting to see DATs for other cryptocurrencies and those cryptos benefiting from it.
David, Josh, I'm with you, David. Is it interesting that Doge ETF is coming out? And we've joked about Doge, and I'm not making any investment recommendations nor judging anyone who does or doesn't own Doge, but we're getting to a place where ETFs for cryptos are based on cryptos that don't have a defined use case.
Doge is a little bit of the exception, I think, just because it's like almost a top 10 market cap token. Yeah. So I'm going to put that in a little bit of a different bucket. Look, I do think in the future, these meme coins will become community tokens with utility, and We've seen that with soccer teams, and we'll see that, I think with, big stars and such. I'm going to say Doge is sort of an outlier, and not because of its market cap and sort of iconic status as the meme coin of crypto. It's sort of in a different place. But one thing I will say is that some of these DAT companies feel like they're trading a little bit like the ICOs. Big pops at the beginning, and then a fairly sizable sell-off. And I think we're going to see soon the ones that are doing more than just holding crypto, maybe staking and validating, versus the ones that are just holding crypto. Because I had a call with a partner in a law firm today, and he was saying, how are these DACOs going to pay like a 7, 12, 15% yield?
Yeah.
And what's going to make them attractive versus holding spot in those cryptos?
Yeah, Josh, go ahead. I think you wanted to weigh in and tell me, are we done? Are we at peak digital asset treasury company?
So I don't know if we're at peak yet. And I would say this, a couple of things. One, about Doge. I haven't been following the price action lately, although I know you guys likely have. But my recollection is that there was a strong correlation, at least historically, with Bitcoin. So I just think that's also an interesting wrinkle, right? Because as David was noting, it is probably the meme face of crypto to many. And the fact that there has been a Bitcoin correlation, it's, I don't know, like maybe a diversification of names, right? But if it's moving in the same direction, just interesting. I think one of the things with the DATs that I was discussing this with someone earlier in the week, and it's really the question about, and this is something we've touched on in prior weeks, but about how people are going to differentiate what they're offering. So obviously MicroStrategy, Now Strategy, like they have the leverage play, right? For Bitcoin. For other types of digital assets, though, I mean, in terms of strategy and differentiating, some of them, my understanding is, have now begun investing in other DATs as part of their strategy. And, to me, that gives, and to this other person who shall remain nameless, but with whom I was chit-chatting, it does give shades a little bit, hopefully not, but not just of ICOs, but of 2007, right? Or even 2021, 2022, when you had an asset that was rehypothecated, and it was ultimately one asset. So I just do think that as we see more and more digital asset treasury companies trying to differentiate, to the extent that we end up with some sort of product that is, that is very much like the real estate market back before the financial crisis, it gives me a little bit of pause.
Josh, really well said. And on Doge, again, I don't necessarily mean to be negative on Doge. It's kind of an OG alt, and you really can't sneeze at. I know it's only a $40 billion market cap, but I'm with you, Josh and David. It brings me to some of that perceptual challenge that we've seen. And I agree with you, Josh, like it becomes the chasing the differentiator, and the more you chase the differentiators, the harder it becomes, and you start getting the crap that goes to market, candidly. But David, it also makes me wonder, how do markets perceive DATCOs broadly, or the use of Bitcoin or crypto as treasury? And I think, David, where I'm going with this. Strategy kind of got punted to get included in the S&P 500, but Robinhood didn't. Is that kind of a reflection of the exchanges, for example, not being, or the index providers not being comfortable with an S&P 500 company holding large amounts of crypto?
You know what? Considering that NASDAQ just applied to try and tokenize stocks,
yes,
and they invested in one of the digital exchanges IPO, I'm going to say no to that. But look, I think, we're not involved in these decisions, but Strategy is a really innovative company, and they will be in the S&P 500 at some point. And Robinhood has performed amazingly well. So I don't think we could look at it that way. I think we all would like to see Strategy in the S&P 500, because I think it would, just be another acknowledgement of the role that crypto is playing in our global economy. But I wouldn't necessarily look at it negatively. But I will say that I think as long as we don't have ETFs or ETPs for certain crypto products, the treasury companies make sense to the extent someone wants to get exposure to a certain crypto and they don't want to buy it on a traditional crypto exchange.
Right.
And there is the safety element that if somebody's buying like a structured product on a trading exchange, it's in their account, in their brokerage account, they don't have that issue of loss.
Yeah.
So I still think there is a utility there, but I think as we get more funds and more ETPs, and those are options, we'll have to see what the digital asset treasury companies do to differentiate themselves from funds.
Yeah, Josh, go ahead.
I mean, and there are certain types of folks who can't invest in ETFs or ETPs, and that's why, like, for them, investing in a digital asset treasury company, perhaps makes more sense because they're not allowed to do the other. I do think also, and I think this will change as a result of some of what we've seen foreshadowed by the SEC and otherwise. But I think right now, digital asset treasury companies can engage in staking, right? They don't have the same limitations that, say, like an ETF. So an ETH ETF versus a digital asset treasury invested in ETH. So that is, I think, also a differentiator. I'm not saying that there aren't roles for some of these things. I do think that, well, I guess we've talked about this previously, the kind of diligence that people should be able to do, but often aren't having time to do. It's one thing. And also, the extent to which the shell that is being used is clean versus dirty. That's a big thing. And if you can't diligence, you don't necessarily know.
Josh, let me ask you on that point, because this comes up a lot, and I agree with you. But the question becomes, we hear disclosures and diligence and all of the interesting stuff. How many people that would buy into some of the DACOs are going to be doing that due diligence?
It's a great question. I mean,
it's a concern.
Yeah, I mean, I think that a lot of these DACOs, they've happened, like the investments have happened like over a weekend or a really short period of time, like short enough that we couldn't even like onboard them at my firm because we do full KYC AML and financial crimes checks, right? It was like over and done with before we could, for people who were looking for advice about, diligence.
Yep.
I do think a lot of what people in my experience have been looking at is who's the lead investor, right, in this, and taking some faith from that. But again, to the extent that you are using a shell company, like for these, these essentially SPACs, right, these SPAC transactions, you're getting also the liabilities. So, that's another thing. Like something that came up recently was a question of, okay, so if a digital asset treasury price per share is below the actual value of the digital assets held by it, someone had suggested, maybe that's never a problem because you just liquidate the underlying, right? You liquidate the holdings. But, and a lot of buts in between, you know, one thing to think about also is, of course, what liabilities does that company have, right? So maybe it's not.
Josh, how important, I'm going totally off script here, but how important is the jurisdiction conversation for some of these shell companies, to the extent you can talk about it? Like how much is that is part of that due diligence conversation?
I mean, I think it should be part of the due diligence conversation, right? Certainly. Because, what recourse you may have, what kinds of laws will govern the, if you're purchasing shares in a public company, shares in a digital asset treasury, like what governs your rights? I would think, again, I think part of it also just goes to, are there liabilities that you're not aware of? What I guess even things like jurisdiction, if you wanted to bring suit, where could you bring suit? Could you bring suit? Things like that. But I'd love to hear from David on those points too, if he has any views.
And David, just to be clear, I'm sorry, the reason I'm bringing that up, Josh, is, the three of us and so many of our colleagues are professionals in the space, but we still hear conversations of a friend who thinks they're going to go getting a moonshot stock because it happens to be investing in crap coin and it's going to start a crap coin treasury, they don't think about disclosure. They don't think about diligence. David, I'm sorry to interrupt, but go ahead.
No, I agree. Look, I've been pitched for a couple of these treasury companies, and basically, I've gotten a message on a Monday and been told, you have to cut a check by a Thursday.
Yeah.
And it's a meaningful check, like a 6-figure check. And, you're given very little information. You might know the principles. You don't know what the strategy is going to be. And look, some of these pipes are very, the people who are in these pipes, sometimes they can be very lucrative because you might be getting the shares cheaper than what they'll go to market with.
Yeah.
But I think there's just this incentive to sell right away for a lot of them. So
Yeah.
to go to your question regarding jurisdiction, I mean, obviously we have a very robust set of rules and rights here in the U.S. that, people are aware of and are well worn, and they're just different in other jurisdictions. And so you just have to be aware of that. But I think ultimately, look, I'm all for innovation, and I think this is, another interesting twist to get people exposure to crypto.
Yeah.
And I think there'll be winners and losers. And just my hope is that it's in a way that's clean, and that that it doesn't cause a cascading effect if some of these aren't successful.
David, Josh, I'm going to go McLaughlin group on both of you. And anyone who's 40 or over understands what that means. But David, I'm going back to something you and Josh and I said. Let's imagine crypto ETFs fully enabled to stake and devolve those benefits to holders. When a significant number of those go public and become available, what does that mean for treasury companies? Why invest in a treasury company at that point?
Well, I mean, I think the ones that aren't staking and running validators and other things, I think it's going to be very hard to differentiate value. I mean, I think in some ways it becomes, kind of like a hedge fund for that one token. And can they market time buy well enough to outperform a fund that's just buying on an inflow basis?
Yeah. Josh, I felt your mind wanting to say something.
I 100% agree. I mean, I do think that's why I kind of was thinking about like the strategies that people have been saying of like, okay, they're going to invest in other digital asset treasury companies.
Right.
So like, yeah, I mean, there are strategies, but it does begin looking like a hedge fund, and it begins looking like a whole bunch of other things.
Yeah.
Right. But I do think one of the things, and this could be a great opportunity for some, although, challenges for others, is my understanding is that these digital asset treasury companies, which, they're springing up left and right, they're having some challenges, like really recruiting CEOs and people to be like C-level executives at these new public companies. So I think for those who are out there and who may be well positioned for that, could be a good opportunity. Could also, of course, depending on how it pans out, be a reputational risk, right?
I'm going to say due diligence.
Yes.
Josh, David, complicated stuff. We'll keep an eye on it. And for everyone in the audience, I am not shilling a Shiba DATCO to either David or Josh, and that's never been part of Mon Conversation. All jokes with Sonia Goklani. Shout out to Sonia to the contrary. Josh, let's talk about something that we talk about every other week at our legal working group. It's the legislative and kind of regulatory landscape of what's happened in crypto. And the three of us and so many of our lawyer friends and colleagues have been through the trenches of what's happened in crypto. And it's a different world now. Would you have imagined a year ago, Josh, that the opposition party, the Democratic Party, puts forward their own proposal for market structure legislation for the crypto space? Full disclosure, I haven't read through it, Josh, but I'd love your opinion about, when you saw that news and what you thought.
I mean, no, I would not have thought it a year ago, in part because I think the mantra at the time was, we don't need any new laws. Everything is clear. Right. Everything is covered. And the answer is no. Right.
Right.
So I think on that, for that perspective, I think it shows huge progress.
Yeah.
I do think that if we think about the opening remarks that went along with these principles, there was a focus on hacks, a focus on crypto in use for terrorism and things like that. There was a focus on President Trump and what it, activities in that regard. And this is from, I think that is actually, I may be mistaken. I think that actually, I'm thinking back to something that Elizabeth Warren was saying, believe it or not. So let's just
that sounds right.
reverse the tape on that and just disregard everything I said, except that what I said about, it being a huge step forward, I think is true. Sorry, I was thinking of a different speech.
It all blurs together. I'm with you, my friend. David, go ahead.
So I think this is a really positive step, because if you think about it, we had the House draft bill on market structure, and then we've heard different senators and Senator Lummis say that they're going to use the House bill on market structure and then add things to it or change things as they see fit. Usually you need to have a competing side to negotiate with when you have these bills, and there's usually competing bills. So I think it's really positive that the Dems have come out with a bill, proposed sort of points that they think are necessary to be in a bill. And while, I will weigh in on what I agree with and what I don't agree with, I do think it's good that there's a platform for the two parties to work from. And I think there's a bigger coalition of Democratic senators involved than just one or two of them. And so I think this is a really positive step from a political side of things. I do think there are points that are going to be discussed. And I don't think that the parties are aligned on. And I still think there's this, I don't know when we move away from this narrative that there isn't AML and KYC and it's not robust in crypto. I mean, I wish, my hope is that people really dive into the facts more and really see, because I think the Republicans appreciate that. And I still see it as a talking point for the Democrats. So, but all that being said, I do think it's good that there's this unilateral proposal from the Democratic side, and now there's a framework to have, negotiations.
David, Josh, I'm with you. I want to throw one thing out there as well. And again, I did scan over the proposal, and I haven't taken any notes yet. But one of the things that struck me is this kind of common refrain around disclosure. There must be disclosure. There must be disclosure. And I fully get that. I guess the question becomes, this is really an opportunity for the industry itself to help define what those disclosures should be. And the reason I'm saying that, Josh, David, tell me if you disagree, is that in the absence of that, you get legislators defining those disclosures who don't understand the challenges of what those disclosures should represent. Is that true in your estimation, or am I kind of barking up a wrong tree? Or I could be totally wrong, which is absolutely fine if you tell me.
Oh, I was looking at Josh, so I'm going to let you jump in first.
Let me just say, okay, well, so before I jump in on this, I will just say, in the meantime, I was looking up online, and I was not, in fact, incorrect. Those statements were made and were referenced again by Elizabeth Warren in connection with this latest foray by the Senate Democrats. So in response to your actual question, Ron, I mean, I think there always is some sort of a balance, right? We've been, I think, to the extent that we want regulators to make rules, regulators can make rules. Sure. And to the extent that folks have not been necessarily happy historically with how regulators make rules, that's why we were, impressing upon Congress the importance of having new laws passed. It is an interesting time now that the two of the major regulatory agencies, the SEC and the CFTC, have their Project Crypto and Crypto Sprint, ongoing, and seem to be saying, welcoming a lot of new innovation and have appeared, at least to my mind, to be signaling that they don't necessarily need new authorization from Congress in order to be able to to do a lot of the things that they want to do, and in order to be able to have the kinds of rules that they want to have. So yeah, I mean, I guess there always is a risk, right?
Yeah.
That, but I think even when you have Congress passing laws, to my mind, things are going to go back to the regulators to have implementing regulations, right? And so I think a lot of those granular details will be figured out at the regulatory level. But
and look, Josh, to your point, we've got the SEC doing a roadshow to meet with industry participants, which is something that we would not have seen in the past. David, Josh, thanks for that. I wanted to add one more thing to that. And a few weeks ago, Josh, you and I had the opportunity to speak to international reporters. David, we had you there with your thought leadership, which is always amazing. I'll share something that I found interesting when we talk about the perception of what's happening in the United States. And Josh, I'd love to hear if you or David have seen similar. I've had several follow-up conversations with some of them, certainly not only representing my opinions. And their perspective was, well, basically the crypto industry wants to say everything is not subject to securities law, and the United States is the Wild West. This is literally a perception that's happening in some jurisdictions, and I'm just going to say it, the EU, for example. David, what does the industry have to do, and what does the United States broadly need to do to change that dynamic?
Well, look, for starters, you both did a great job with the, in that State Department roundtable, and I've had reporters reach out to me too, and haven't been able to speak on the record, but look, I think one of the issues is that this rhetoric is sort of overshadowing things that we all know that are truths here.
Yeah.
When you're onboarded to a crypto exchange in the US, they run KYC on individuals. They know who their customers are. Mm-hmm. I would say that the KYC is equal to, or maybe even a little more robust than you would have for, an online brokerage platform. And so I think there's this fallacy regarding AML and KYC. I think the challenge is really more on what is the expectations of the protocol and what's the AML and KYC for funds used by the protocols. But the protocols are still using exchanges and are still, being onboarded. So I think a lot of this really, to answer your question, Ron, I just think the more people are exposed to it and the more people really dig in and learn the facts instead of just sort of like listening to catchy headlines and really dig in, that they'll see that this already exists.
Josh, do you agree?
I agree with David. I also think that, when we look at other jurisdictions and people maybe casting a critical eye at the US at times, and we have to remember there is intra-jurisdictional competition, right? That's evident even from the way the president's executive order and the president's working groups report, like the titles, these all of these different initiatives, right? There is a view of trying to set it apart, your own jurisdiction in terms of, if you're someone who thinks that crypto is important. And I think that for some jurisdictions, and with all respect, of course, to my friends in Europe, for certainly for a long period of time, people have said, oh, Mika, right? Or Mikar, depending on who you're talking to, right? Oh, that's leading the way in terms of some sort of regulation. And I think what we're seeing now is, the US has a huge market. There's a huge appetite for digital assets. There's a huge hotbed of innovation. And so I think other jurisdictions are saying, wait, are we on our hind feet or whatever it is, hind legs?
Yep.
And
Back
really,
foot?
yes, exactly. And so looking and trying to say, oh, well, now it's just a free-for-all. I think it's anything but a free-for-all. But quite frankly, and perhaps I'm wrong on this, but my sense is that if people thought that the US was so deregulated that it were a free-for-all, a lot of money would be flowing in.
Yeah, Josh, that's absolutely right. That's absolutely right. And Josh, thank you for saying Mika. I said Micah to a friend of mine from the UK and from you, and I was promptly corrected. David, go ahead.
No, look, I agree. And I think, look, our stock markets I think the irony is that a lot of times other countries were following our lead. And so when we were being tougher on digital assets, a lot of the countries were following that lead. And only in the last couple of years did they try and innovate, to different patterns. But ultimately now we have a new administration and a new SEC chair who's really embraced this. And, he said, this is the time for crypto, and he wants to find solutions to move this forward.
Yeah.
And I think, there's a lot of rulemaking to be done. I think, we have 18 months worth on stable coins, coming. But I do think that we have the right frameworks here now and the right mindset to really embrace both crypto and AI, here in the US.
David, Josh, thanks so much. There's so much to cover. I want to throw a couple of other wrinkles, and we've got a little bit of time. David, you and I share text messages about the most recent IPOs over and over again every week. Again, for everyone in the audience watching, none of this is investment advice, but a lot of the crypto-focused companies have had very successful IPOs after what you could arguably call a pretty chilly IPO market in the United States. David, and there are a couple of big names coming up. I want to ask a question you and I were talking about a bit earlier, and I'm trying to wrap my head around it. How deep is the precedent for companies that simply don't make money to go IPO? And I think a broader question is, why aren't some of these companies making money?
I think that's the bigger question.
Yeah.
I mean, I think that we've had, a bullish and trading environment. Trading volumes have, increased. There's been more demand. So I do think that is a question to ask for the companies that aren't making money: is why aren't they making money?
Yeah.
And are they not just seeing the volumes, or they're not making money on trading volumes? Like, I do think that's important. That being said, I do think, this IPO cycle, we're going to see some winners and losers. And I think we'll see some that will do very well.
Mm-hmm.
I think Circle, really showed there's an interest and demand for stable coins, and people want to have exposure to stable coins. I think other exchanges, have come out. Bullish had a very successful IPO. But I think we just need to see sort of longer term, how investors view the shares of these companies if they're not going to make money. Yeah. And look, sometimes you're buying on the promise of what can be, but I think you only have so long a period of time before you have to start making money.
Josh, chime in, and let me add one more question to that, which is, and I have a personal opinion about this, but how many of these are setting up for a merger?
No, go ahead, David.
No, I would just say, look, I will say this from the business side. A lot of times companies do an S1 in some ways to see what the interest is to buy a company. That they don't necessarily want to go public, but they want to be out there. And, by filing the S1, you're creating almost an auction for the company.
Right.
At the same time, I think that these companies have been in business a long time, and you have, employees who want to be able to cash out, and this is a necessary way for them to do so. But ultimately, I think we'll see consolidation where traditional finance companies will buy some of these exchanges instead of building them. And that's what I would expect over time. And I hope I didn't steal Josh's thunder, but I have a feeling she's going to agree with me. But that's how I sort of view it.
Yeah, I do agree with David. And I think this leads to a conversation that I was having with some friends the other night, which is just about scale, right? And the importance of scale. And it was sort of like a compare and contrast. Do we think people should be consolidating and going big now, or whether, smaller companies may have an advantage? And I do think, especially now that we have the banks coming in, whether, holding aside, obviously we understand that the bank lobby has a lot of thoughts about the Genius Act and other things, and a lot of concerns that they've expressed. And at the same time, we do know that banks are becoming more and more active in digital assets, right? So I do think that as that happens, that both in the case of banks and who they're going to choose as their partners, whether these are folks that they may ultimately acquire, or whether it's just that they may have some sort of JV or other ongoing working relationship with, I think they are going to look to larger players. And I think, so I do think scale is going to be a big thing, just to, not bury the lead. But also, I do agree about consolidation, not just because of the ability to get to scale and to have, meaningful competitors out there.
Yeah.
But also because I think, and we saw this in the Goldman Sachs report that came out earlier, in the year, where there's this trend towards acquiring to catch up rather than, trying to organically grow.
Yeah, which, for those who've followed financial markets and the ecosystem, Josh and David, for, pre-crypto, that is a strategy that we often see from incumbents in the race to update their strategy for the long term. Josh, David, we've only got a couple of minutes. One thing that I've been negligent in adding to the schedule for us, and I think we should start covering more deeply, is certainly tokenization. We talk about it, on the day-to-day and week to week within the WSBA. We do it within our respective roles. The news recently, David, Franklin Templeton partnering with Binance. We continue to see work from BlackRock. We continue to see work from other financial companies and TradFi organizations. How important is the tokenization dialogue? And are we closer from a real-world asset tokenization perspective? Or are we falling behind?
So I think we're making progress, but I think we have some fundamental issues we have to address. And I actually was talking to some of my colleagues about this the last couple of days. We had a meeting in New York, and we were talking about, what are the distribution channels?
Yeah.
What is there going to be one blockchain that's going to be sort of the winner? Will there be several blockchains out of the winners? But I think right now, how does this get sold to retail? And I don't mean just tokenizing a share of stock, but if you want to tokenize real world assets, are those tokens only going to be available to accredited investors? Or is there some way that are they going to find their way to retail? So I think, two main issues are liquidity, what blockchain is going to sort of prevail, which one or several blockchains will prevail, and how will uniformity occur within tokenization, so that there's platforms that can offer all of these assets. And I don't mean just tokenizing shares of stock, but I mean tokenizing real world assets.
Yeah.
Yeah.
Josh, please.
I mean, I have just something that's been troubling me slightly. Not like in any real way, but just something I've been thinking about, basically, which is, and this came to mind in part because I saw a CoinDesk article today saying, and I'm quoting from the title, Christie's closes digital asset department as NFT market stays frozen. That's by Sam Reynolds and Parikshit Mishra. Sorry if I mispronounced that. But it just occurs to me, like, the haves and the have-nots of tokenization, right? Like, why are NFTs, not so hot right now, but real world asset tokenization is hot? Like, it seems to me like those things, like holding aside stocks and bonds, like you guys were just saying, it seems to me that those are kind of like natural friends, right? Especially because NFTs can be so much more than just digital collectibles. So I'm just wondering why the RWA stuff is so hot, the NFT stuff is not so hot. When couldn't the RWA be NFT? I mean, anyway,
I'm going to argue
your thoughts.
Yeah, Josh, I'm with you. I'm going to argue that the NFT, I'm just going to say the word collapse from its all-time highs, left such a poor taste in everyone's mouth that it's back to being fringe. I don't think the TradFis that are kind of tipping their toes in the water on tokenization want to touch them with a 10-foot pole. David, tell me if you agree or disagree. And I do want to go back to one other thing, David, that you mentioned, but it's a good point, Josh, but some people really got burned on the NFT market.
So I will say that I view tokenization of real world assets as just another like financial engineering and structured product. And so in that way, I think it differs from an NFT of a collectible. So if you're tokenizing real estate, or, I mean, basically tokenization is really unlocking illiquid, properties or illiquid assets and making them liquid. Whereas I think the NFTs were really focused on collectibles. And look, I still see use cases for NFTs in loyalty programs, and, ticketing. And I think there's a use case for it. But I think the digital art, everybody having a monkey with just like one has a red hat and one has a green hat and one has a different scarf. I think that part of it was fun and novel, but I really don't see that lasting.
So guys, I agree with you about, as far as at least digital collectibles, so to speak. But I feel like when people have talked about NFTs, they've said, oh, well, an NFT, it's just, it's something that signifies a unique right? It could be a contract right. It could be something else. So it's just interesting to me how much of this is just a change in terminology versus an actual change in technology. Because I totally get it. I totally get the difference between, a nice piece of art, right? And a home or some other kind of asset. But in terms of the technology that is symbolizing or that is embodying that tokenized thing, it's just interesting to me that we had been saying all along that NFTs could do so much more than digital collectibles. And yet when it comes to any kind of tokenization of these real world things, there's an aversion to referring to NFTs.
Yeah. Josh, David, I'm going to throw one last thought in there. And David, I'm going to put my futurist hat on. We talk about NFTs. And Josh, I'm with you. I see your perspective on NFT. And we've all seen the kind of ups and downs of NFTs. I think, David, NFTs proper usage is going to be very closely tied to something you've brought up in the past, which is social tokens and social engagement. I think as that model and use case develops, that will represent a true underlying use case for NFTs beyond pet rocks as digital collectibles. Lots to cover. We'll definitely come back to tokenization as well. Josh, David, we're just about out of time. David, I want to bring up one last thing, and I'm hoping you will both forgive me. Had a conversation with some banker friends, and as you know, I still have TradFi folks who still think the three of us are crazy for being involved in crypto, but now they think we're slightly less crazy because they do see the money and the opportunity there. One of the conversations was very much around tokenization. One of the conversations was also very much around stable coins. And the feedback was, oh, great crypto industry, you're building a bunch of new walled gardens for us to figure out how to participate in. And it kind of struck me when I look at stable tokens issued by these various participants, David, how accurate is that description?
It is accurate, but I think it's accurate for a good reason. And I was really mulling this over when a couple of the big stablecoin companies said they were building their own blockchains.
Yeah.
And I was thinking about, well, is it that the existing L1s can't handle that many transactions? But I think when it comes down to is if stable coins are going to be, used as in commerce on a consistent basis, you can't have, oh, I just fat fingered 100,000 USD whatever USD XYZ. I don't want to choose one as an example, and not have any recourse.
Yeah.
And so I think this might be one of the places where a stablecoin having its own blockchain is okay to undo transactions because you're not undoing rights of a party, like different than like, when we had the DAO with Ethereum and things like that. You're not going to have a hacker sort of say like, oh, I found an exploit in the contract. These are mine. Right. It's really going to be somebody meant to send Josh, 100,000 USD XYZ for her legal services, and then he sent it to somebody else.
Yep.
So I think that they need that. I hate to say it. I mean, really for customer service, but ultimately the walled garden is going to serve a purpose different than I think from other walled gardens where you're really trying to keep people out.
David, only 100K services for Josh? Come on, that's a
Like,
load.
that was just a retainer. That's just to like get started. That's just to kick the tires on a project.
Josh, last thoughts, my friend.
My last thoughts. Well, I
Well, you
would
can
say,
add to that and then give last
no,
thoughts.
I guess just I would just reflect on earlier in the week. I was at Parliament for the inaugural international. Sorry,
Someone from Parliament is calling her.
now, but for the inaugural international digital assets policy and regulation roundtable.
Well done.
That they hosted. Yeah, it was really fantastic, and it was great to hear from others from around the world. So I'm still thinking about some of the comments that were made there, and looking forward to see what comes out of that. But I'm also for this weekend, since we usually talk about what we're going to do, I'm looking forward to not flying anywhere.
For anyone who
you
knows
guys.
Josh, the most emails I get from you, Josh, and I'm sure this is true for David as well, is the out of office email. Yep. Usually with I'm flying internationally. I'm like, that sounds about right.
I mean, David, it's great, but I'm happy not to be doing that this weekend.
Get some good relaxation time in, Josh. It's way overdue. David, what about you this weekend? And what are you looking forward to next week?
I do want to say I was in New York yesterday, and it was 9/11, and I did want to acknowledge that. It's been 24 years. Doesn't feel like it's been that long, but it has. And I just, I heard the reading of the names, and I did want to acknowledge that loss and, what it means to everybody. This weekend, I am thankfully going to be in parenting mode, and I am headed to Parents Weekend at the University of Miami, and going to see the Hurricanes play tomorrow. So I'm really looking forward to some quality time, and I'll certainly be doing some reading this weekend and some work, but looking forward to some quality time. What about you?
A well-deserved respite for both of you. I'm going to desperately try to take it a little bit easy this weekend. There's a nice Chianti in the house waiting for me as I review the Democratic proposal. Not sure that's the wisest approach for me, David and Josh, but we'll figure it out. And certainly a lot of what we're focusing on is David. Josh, you and I are going to be in London in a couple of weeks at the GLG Global Legal Group Conference. Looking forward to speaking there. For everyone watching, thank you so much for joining us. Our WSBA in-person event, the Crypto and Blockchain Summit 2025, Thursday, October 23rd in New York City. We still have some public tickets available. Please join us. You get to see David in person, Josh in person, so many members of the WSBA. It's a great panel, a great session. You'll see the agenda posted very, very soon. Other than that, I'm going to try to make it a quiet weekend. David, Josh, it's always a privilege. If we missed any questions anyone wanted to ask, please email us info@wsba.co, and we will address it next time. Have a great weekend, everyone.